Yeah, good morning, everyone. My name is Samson John. I'm here to share with you uh, on the third day of the class. I'm here to talk about market structure. Like told you in the introductory class that we had yesterday about the market structure, I said that, like in every market, there is a structure. Whether it's Okrika market, whatever market you're going to, there is a structure. There is how the market behaves. Like when you go into a business, you need to learn about the market and see how you can actually understand the market before you begin to trade in the market. That is how even the binary market is. There is a structure, there is a way the market behaves, and every one of you must understand how the market behaves in order to be very, very successful. Now, the market has three phases. One of the phases is an uptrend. The second one is what we refer to as a downtrend, and the third one is what we refer to as the consolidation period. Now, when the market is in an uptrend, it forms an upper structure. That means you see more of this white candle facing upward. Look at you see more of this white candle facing upward. And I said that for you to be able to determine the overall view of the market, you should start viewing the market from the H4 platform. Remember, in our previous class, I told you about time frames. This one on this left hand side. When you click on your phone, if your phone is horizontal, you put it in an horizontal view. Just click anywhere inside the graph. This stuff will pop up, and if the time frame didn't pop up, that means you're using the the currency side of it, where you have boom, crash, 1000, all of that. When you click this thing that looks like clock, let me click it. You see, when you click it again, it changes to this thing. Now, when you see M1, M5, M15, M30, H1, H4, those are time frames. That's what I refer to as time frames. Let's go to 4 hours now. When we go to the 4 hours time frame, you find out that the market on this other side of the market, we actually coming. Sorry. Uh, let's see how I can use brush. Okay, let's look at something. Okay, now look at this market from here. Look at this market from here. You find out that here we are in an uptrend. Look at here. You find out here we are in an uptrend. Why? Because the market is facing upward. But when you look down here, we are already in a downtrend because we have too many black candles here facing downward. Now, this market on the overall, we are in an uptrend here, but the market has begun a new downtrend. Are you seeing it? We were in an uptrend before now, and there is a kind of a support around here where the market reaches and changes direction. Now, it began a new downtrend here on the 4 hours. Now, so if it begins a new uptrend on the 4 hours, it will click anywhere around here. I'm coming. It will click anywhere around this graph, and then we come in here on the 1 hour time frame. You find out that the 1 hour time frame is even giving, it gives us a more view of the downtrend, that yes, we are in a downtrend. Let me give you an example of what I'm trying to say. Now look at here. You find out that the market is facing down. It's making like a high, and it's making a high. Look at this high is lower than this high. Now look at this high. This low here is lower than this whole low that was created. That means from here we are already in a downtrend, because if you look at the 4 hours before now, look at the 4 hours, look at the 4 hours, you find out that on the 4 hours we were downward here. Look at that. This is the downward trend. We're looking downward. Now when you look from here and we come into the 1 hour, it gives us a larger view that we are in a downtrend. So this, in this phase of the market now, right now we are in a downtrend. So that is just what I was trying to explain to you, that the market is in different phases and you must look at it from a higher time frame to a lower time frame. Remember that I began from the 4 hours time frame. I began looking at the market from 4 hours, and when I came to 4 hours, I found out that previously, before now, we were going upwards. Can you see it? We're going upwards. The market is looking upwards. There are more white candles than that of the black candles. But right now, we have begun a new downtrend. Look at it now. And the downtrend has just begun. So I will look at a lesser time frame than that of 4 hours. Let's look at 1 hour. And the 1 hour already is showing me that, yeah, it's confirming to that we are in a downtrend. So with that, since I know right now that we are in a downtrend, I will not I just know we are in a downtrend. Now look at that uptrend. So I already know that 4 hours in a downtrend, 1 hour is in a downtrend. So let me go to maybe 30 minutes and see. You see, 30 minutes further confirms it that we are in a downtrend right now. That we are in a downtrend right now and the market is looking downwards. So for any other person, for you to take a trade in the market, you must first of all understand, look at it, it's making downward. This high is lower than this high. This high here is lower than this high here. Can you see? And it's lower than this one here. Can you see? It's lower than this one. This high here is lower than this one, and also this low here is lower than this low here, and is lower than this one too. So this is how you determine a downtrend. When the market is facing downward like this, we are in a downtrend. So that is one of the phases in the market. Now let's look at this one. Let's look at here. Now look at here. Look at this market from here. Now when you look at this market from this view, sorry, now look at this market from this view. Now you find out that the market is going upwards, isn't it? Now in this market here, we are in an uptrend. Look at it, the market is going upwards. We are in an uptrend here. So in this market phase, we are in an uptrend right now. Look at it, the market is facing upwards. So that is what I mean by one of the phases in the market, in an uptrend, and then the downtrend when the market is looking downward. But remember, I said you must begin your analysis from the 4 hours, from the higher time frame. Now look at it, in the 4 hours here we are downward. Now look at a hand, look at this particular one here. It gives us a clearer view of a downtrend, an example of a downtrend. You know, we talked about uptrend, and also give us an example of a consolidation somewhere around. I'll show you. Now look at it, look at it here. Now look at how the market is looking downwards. Can you see? So on this side we are in a downward market. Now the market reaches a particular point around here and begins to change. Why? Because the market came here and it was unable to go, then now it begins to go downward. Now it now came to this level, it couldn't pass this level, and then it began a new uptrend. Are you seeing it now? So in this market here, we refer to it as a downward market. So the market structure here is that the market is facing downward. So that means all the lower time frames too will be looking downward. Now look at here. When you look at here, sorry, not really here. That's not what I want to show you. When you look at here, look at here. When you look at here, somewhere around here to here, okay, here, what I mean is here. Look at this point. Let me clean it up. Now look at it here, around here, somewhere around here to here. Look at that market somewhere around this zone, Now the market is not showing any form of either is going upward or downward. So you enter a trend when you know the market is in a trend, when you can easily tell the direction of the market. Look at here, you can actually tell. Maybe you came around here, maybe you met the market around somewhere around this point. Sorry. Maybe now when you look at this market from here now, eventually you know that the market is going downward. Now look at it. Without nobody telling you, you know this market is going downward. Why? Because it's facing downward. Now look at the 15 minutes. Let's look at the 15 minutes. Now look at 15 minutes. It's further giving you a clear direction that this market is going downward. Looking from here, you don't need anybody to tell you that this market here is going downward, and this is where we trade from. Look at how the market is looking downward. So in this phase of the market, we said that the market is in a downtrend. So that is what we meant by market structure and phases. Now let me show you an example where we'll see the market. All right, now look at here, look at this market from here, look at this market from here. I'm coming, excuse me. Okay, let's look at this market from here. Now look at it from here. Already you know that this market is looking upwards without nobody telling you. Look at this high is higher, this is higher than the former one. Now this one is higher than this one is higher than this one is higher than this one. Can you see it now? So all the whole thing is looking upwards. So that is an upward trend in the market. So with this, I believe you will understand the phases in the market. I said that when you see more of white candles than the black candles, we are in an uptrend. When you see more of the black candles forming, we are in a downtrend. And remember that you start your analysis from the higher time frame. By higher time frame, I mean start the analysis from 4 hours. Looking at the 4 hours, you see here we have more of black candles looking downwards, so and it's facing downward. So we can categorically say that the market is in a downtrend. Now when you see here around this area, around the area before this one here, you have more of white candle. We said that the market is in an uptrend. So that is how we determine trends in the market. If you have any questions, please let me know. God bless.